Hi everyone, welcome back to Trading Wars, and today we're here for another day on the battlefield, and it looked like the Bulls put in a great counterattack. I'm going to be breaking down the intraday price action for the S&P 500, and if you're ready, let's step into the war zone. All right, thanks everyone again for joining me. As always, when we're looking at intraday price action, the first thing we need to do is establish support and resistance. So I already have them drawn up here from yesterday. We have yesterday's high, low, close. And then the next thing we do is look into the bias. How do we determine what direction we want to play today? So one thing I've been getting a lot of questions about and I want to focus on specifically are gaps. And if we look at yesterday, we have something very similar in terms of the gap, but we had two completely different results. So the question is, how could you have known that today's gap would result in a big uptrend instead of a downtrend? So how do we do that? So I want to focus on psychology with you guys, okay? And understanding who's trapped at the open. So let's go back to yesterday. On yesterday, with this gap, the bulls were controlling the market and they have gapped up and they are up on their profits. So as they move their stops up and they get triggered, we have a flush coming down. However, today, who was in control yesterday? Well, the shorts were in control all day. We closed at the lows of the previous day. So when we gap up today, the shorts are in big trouble. All of their profits are gone. Everything that they worked for yesterday, if they're swing trading, are gone. So this is why we get a reaction like this, where once we break through highs, we trend for the rest of the day. So going in today and understanding that the shorts are trapped, the bias should definitely be long. And I'm going to go through the setups for longs, and I'm going to talk about what the shorts could have done today if they still wanted to take another attempt. So for the long setup, once we broke through the high of the day at that point, where you can look for a retest, and the specific entry reason today was a Fibonacci retracement. I'm going to draw it up real quick. A 786 pullback right here with the little hammer candle forming right here. There's your entry. Here are your targets on the way up to scale up. Okay, guys? And that easily could have made you anywhere between 3 to 4R at the very highest point of the day. We had a 4.2R target. Okay, guys? Now moving on to the shorts. So like I said, the shorts were trapped today. So the only thing you could have done with a short bias today is really try to short right off the open as we were gapping up into yesterday's high. And you would bracket stop entry below the low, stop above the high, get filled. And as soon as you get taken out here, you pretty much have to call it a day. And this is why it's so important to understand psychology. Ask yourself who is trapped at the open. These gaps are significantly different, okay? And this is why we have two significantly different results. So in terms of targets, guys, like I said, you could have used the fibs, you could have trailed this mid band on the way up, you could have taken targets, whatever your system says based on your testing. And overall, guys, just to illustrate again, with a P&L on a $20,000 account, using a 1 to 2% risk, we could have got 4R on the long, plus $1,600, and on the short, definitely would have taken a loss, and then you'd have to realize that your attempt is done for the day. And we would have had a result of a negative 1R minus 400. And guys, something very important to remember is even though the shorts lost today, they won yesterday. If you want to take a look at the previous video from yesterday, they won 4R. So losing 1R today is not a big deal, okay? Do not overthink things. Understand when certain levels are taken out, how that affects psychology and who is trapped, okay, guys? So just want to quickly do an outlook for tomorrow. So obviously overnight what happened was good earnings and Google kind of pushing the market up. Going into today, we have the same type of continuation keep playing out. We have a trending environment. So really, if we look at the 5-minute chart, this was the close of yesterday, and then here was Google's earnings. And from there, we just took off. And a lot of times, guys, the earnings are what really stimulates the market. And if we look at the daily setup, bye-bye to all the shorts who played yesterday. They are now taken out of the market. And if we go back to the weekly, guys, this is what I was saying. Double hammer, there is strength. And I was saying, once we break out of these levels, there should be some follow through, and now we're getting it. Okay, guys? So definitely outlook for the rest of the week. Long, I think the bears are going to throw in the towel for now. But when we start getting into some of these other resistant lines I have drawn up here, the battlefield is still open. Okay. So thanks everyone again. Please like, subscribe, comment. Let me know if you need any more guidance on anything, and hope you enjoy the rest of your day. Okay. Take care.